Hi, this is Chris Reddick with Chris Reddick Financial Planning. Today I'm going to talk about how to reduce your taxes as an educator and a government worker. This is probably the number one question that people ask me. And in this blog post, I talk about 4 ways you can actually reduce your income taxes. So different strategies that you can do, specifically focus on educators such as teachers, professors, and government workers. So there's unique opportunities presented with these types of professions. Okay, the first one is to max out your 401k or a 403b. Okay, so educators, you may see the 403b, or you might see a 401k, right? So basically, they're both similar vehicles. In that, if you're under 50, you can put in 20,500 in 2022. Okay, so that's a way to reduce your income and then reduce your taxes. Okay, so that's one way of doing it. And that's the top way, is if you have less income, you're going to pay less taxes. It's just simple math. Okay, so after you max out either your 401k or 403b, right? It's 20,500 under 50. And if you're over 50, there's a catch up. So that's the first way. That's the number one way that people do not take advantage of. The second way is to max out your health savings account if you have a high deductible health plan or a flexible savings account plans. Okay, so with the HSA, you would need a high deductible health plan, but also you can have FSAs or for healthcare, and then dependent care for childcare. So you see with these, they reduce your income, therefore reduce your taxes. And HSA is a very interesting vehicle in that it has a triple tax advantage. Okay, earnings grow tax-free. There's tax-free distributions on qualified medical expenses, and then you reduce your income when you make contributions to an HSA. Okay, but that has to have a high deductible health plan. All right, so the third way is to max out a Roth IRA. Okay, so basically a Roth IRA, after-tax money goes in and it grows tax-free and it comes out tax-free. Okay, so you get tax-free distributions on earnings and growth. But keep in mind, there's income limits on contributing to a Roth IRA. If you exceed the income limits, the IRS income limits, then you have to do what's called a backdoor Roth. And there's a specific process for that. And then the fourth way is a deferred compensation plan or 457 plan. All right, unlike a 401k or 403b, 457 plans aren't aggregated, right? So you can work, for example, as an educator and get a 403b, and then you can work somewhere else and get a 401k. But during the year, if you're under 50, you cannot go over 20,500. But the interesting thing about a 457 plan is that they're not aggregated. So you can potentially do 20,500 in your 403b plus another 20,500 in a 457 plan. All right. And another unique thing about 457 plans is that you can take the money out, and if you separate from service from the employer, not have a 10% penalty if you're under 59 and a half. 403b plans and 401k plans do not have that benefit. So you see, these are set up specifically for government workers, for example, police officers, firefighters, where they may retire younger than 59 and a half and need to access the money, and you don't have a 10% penalty. So the 457 plan, I think, is just a great plan to save in and reduce your taxes. And then the fifth way is to save in a brokerage account. Okay, and a lot of people don't take advantage of this, right? So meaning that you open up a brokerage account, perhaps at Vanguard, Fidelity, or some other provider, and then you put in money, after tax money. The drawback is that it'll get taxed as you go, like dividends get taxed. If you sell it less than 1 year, you have short-term capital gains, and you have long-term if you sell it more than 1 year. But you could do municipal bonds that aren't federally taxed. Okay, so there's a brokerage account is a fifth way. So it's not the top way, but it's a way to reduce taxes. If you hold investments more than a year, you get more favorable tax treatment. Okay, other ways of reducing your taxes is obviously to give to charity, to reduce your income, you could set up what's called a donor advised fund. You can put money into the fund, and then you get immediate tax deduction as a result. All right, so these are some of the main ways that government workers can and public and educators can save on taxes. Reach out if you need any help with these different areas. Thanks. Bye.